Hi friends, Yorazare from Simply Options. It's been a long time since we posted some video. This is my case for the last 3 videos. I'm saying we are going to put some continuous videos, but for some odd reason we couldn't adhere to it. Let's hope we should be able to do continuous henceforth. So today's episode is a special episode wherein we are going to review our company's performance for the last financial year. So, like what went right, what went wrong, what are our key learnings, and what are our action plan for the next financial year. These are the things we are going to cover in this special episode. Without any further ado, let's get into it. This financial year performance I would rate as a movie with a mixed review, particularly with a very bad climax. You will understand when we bisect the data why I am terming this. Okay, so let's get into it. See, I'm just going to my IFL account. Okay, so I am going to the PNL for the year 2022-23 for features and options, and I'm just running. Yeah, so as you could see, my overall PNL for the year is around 32 lakhs out. It's a 1 crore account, mind you. So we have made around 32% after all charges and stuff. So this is our this financial year's performance. I would say it's a mediocre performance. Basically, the fact like we run a volume of very high volume during expiry day. So 1 crore account we run it like a 2 crore account. So in spite of that, this performance is a mediocre performance. Particularly, I was around 40% up until January end. For the last 2 months, Feb and March, we had a dip of 8-9 lakhs. So it's some 7% drawdown. So that's why I termed this as a bad climax. So I'll show you the metrics of this particular financial year. So you can see this is the graph. So this year you can see there is a steep up move for the first 2 quarters, and the third quarter around August, September, some flattish months. Then again we have a steep up move, and during Q4 you can see there is a big dip in the graph. So it's basically just happened in 2 days. It happened in Feb 1st and 2nd. Feb 1st being the budget day and the next day being the expiry day. Both were actually a high probability for an option seller, because there will be a big chunk of option premium extrinsic value, and if the market doesn't move a great bit, we should be able to pocket all that. So it's actually a high probability. But unfortunately, the market were extremely choppy, because one side the budget were offering a good news. On the same day, Adani stocks crashed. So both mixed and the market was extremely choppy. So we booked around 4% on budget day alone. On the next day again, the expiry day also was a continued volatility, and then again we booked another 2%. So 6% we lost it on two days, 2 trading sessions. So the key learning here is irrespective of the fancy premium, irrespective of the probability where we will be able to achieve a greater return, adhering to the portfolio stop loss strictly. Our portfolio stop loss is around 2%. Adhering to that strictly would have saved us 2-3% extra. So just that one thing, the key learning which I would take from these 2 trading days is adhering to the portfolio stop loss. Okay, and the next is you can see quarter on quarter performance. You can see it's a steady quarter on quarter performance, and Q4 January we were up by 4 lakhs, and then the entire Q4 is minus 3 lakhs. So basically we have lost around 7-8 lakhs in Q4. So this is about the quarter on quarter performance. Just some metrics for you. This is our P&L distribution. You can see so many dots is been on a positive side, and even the loss making dots, most of them were below 1 lakh or close to 1 lakhs. So this is how we have modeled our strategies. We lose a small chunk of bit when we lose, and we continuously gain a good amount of profits. Just the 2 dots you can see, one dot is around near to 5 lakhs and the other dot is near to 3 lakhs. Just because of the 2 bad days, this whole financial year profits have dipped greatly. Otherwise, this is the our total metrics, like our winning percentage is around 64 percentage. Our losing days obviously is this 36%. So we basically win 2/3 of the days and we lose 1/3 of the day. Our average profit per day is around 42,000 and average loss is around 34,000, which is also the risk is to reward. We are slightly on the higher side. The only big number which I would like to show you is the 9 lakhs. This 9 lakh drawdown is all that happened in the last 2 months. So, I mean, this is the part and parcel of the trading. Just that one mistake, we didn't adhere to the portfolio stop loss on one given day. Otherwise, it's all part and parcel of the system. We are confident and we will be getting over this phase quickly. Having seen my previous financial year performance, learnings, all that stuff, let me get into my action plan for the upcoming financial year. Okay, so we have a capital of 1 crore, so we have made around 30 lakhs profits. So I am planning to scale up for the current financial year through a prop desk. So I would like to withdraw some amount of money, say 25 lakhs, and put into a prop desk and take 3x leverage, so that I will be running for the current financial year. I am planning to run for 2 crores. How 2 crores? I will be running the same existing 1 crore in my with the existing broker, and I would take the profits of 25 lakhs and take a leverage of 3x. So 1 crore will be on the prop desk. So totally for this financial year, I am planning to have an exposure of 2 crores. This is plan number 1. Plan number 2 is the multiplier and diversifier concept. So currently we have also we have a basket of 25 lakhs, 50 lakhs, bigger baskets we have. So that we are diluting and we are trying to create a 15 lakh basket, and we'll multiply that basket according to the capital size. Say if we have 1 crore, so for my basket I'll run 6 baskets of 15 lakh. So which will accommodate 90 lakhs worth of strategies, and the remaining 10 lakhs I will we are trying to add few diversifying strategies, specifically which is having negative correlation or uncorrelation with the existing strategies. So basically this 15 lakh will be a multiplier concept, and the remaining amount for bigger accounts will be concentrated to have strategies which will diversify the existing strategies. This is how we are going to plan. Why smaller baskets is for some reason smaller baskets is having a greater control, greater visibility, greater ability for us to take actions quickly. So this is the concept. These are the 2 main action plans, and this 15 lakh baskets ka weekly performance we are going to publish it online every week. So it's going to be on a Google Sheet. The link for that particular 15 lakh basket will be given in this video's description. So those who are interested can follow our 15 lakh baskets performance. The thing is, even though we post our daily PNL every day on Twitter, for some days we take over exposure, some day we take under exposure. It will not be easy to gauge our performance. So those who are interested can follow this 15 lakh basket online tracker, and you can able to identify how our strategies have performed. So that's about it. This is the update which we wanted to give. We'll catch up in yet another video. Cheers, goodbye.